Hello, everyone. Welcome. We'll get started shortly, guys. Welcome, everyone. We'll get started. Welcome, everyone. Hey, Kawisi, welcome, Kawisi. Welcome, guys. We'll get started shortly. All right. Welcome, everyone. Welcome, guys. All right. This is our beginners class. So if you guys are here for the first time, and I see some new faces here. All right. So welcome, BB. Welcome, John. Hey, Miranda. Hey, Kawisi. Welcome. All right, guys. This is our beginners class. So we do this beginners class every Tuesday. All right. We do several classes throughout the week, Sundays through Thursdays, same time, but our beginners class is for brand new traders. So whether you guys have been trading for a week, right, a few months, even a few years and still trying to figure things out, or even if you haven't taken any trades at all, this class is for you. Okay. So when we do the beginners class, I always want to find out how much experience you guys have, right? Trading experience. Is anyone out there without any trading experience? If you've never traded before? Anyone out there? You've never traded before, haven't executed a trade? Anyone? So everyone has executed a trade, taken a trade. Who has more than 1 year trading experience? More than 1 year. All right. Okay. So yeah, we will cover this is our beginners class. Our cryptos class that's on Sundays. Okay, but so this is our beginning traders class. All right. So what I'm going to assume is that you guys are new to trading. Okay, new to trading. All right. I've been trading for over 25 years. All right. So I've been doing this for a long time. Hey, Mary, welcome. All right. About 2010, so about 12 years ago, I started a company called Monster Trading Systems. All right, so we build trading systems for traders, tools for traders. We also do training and coaching. Okay, so I've been doing this for a while, and I would like to think I've figured some things out. Okay, so as we go through this, I'm going to give you guys some tools that I think is necessary as you guys start your trading career. All right, so stop me if you guys have any questions. Okay, I call this your safe space. All right, so I call this your safe space. So we shouldn't have any of our experienced traders here, right, on this Zoom call. So this is for beginning traders. All right. So I'm going to give you guys some tools that I think will help. All right. The first book that I recommend is Trading in the Zone. So if you guys see it here, Trading in the Zone. All right. Master the markets with confidence, discipline, and a winning attitude. All right. We recommend this book to all our students that we do one-on-one coaching with. All right. We actually give this book free to our one-on-one coaching students. All right. So Trading in the Zone, master the markets with confidence, discipline, and a winning attitude. All right. Anyone here, are there any specific, most new traders have specific questions? All right. Most new traders have specific questions. Do you guys have any specific questions? No? Okay. All right. So let's go through it. All right. So Trading in the Zone. All right. You guys, there's a free audio book on YouTube. Okay. So you guys can go on YouTube after the class and start listening to Trading in the Zone. It's all about your mindset, all right? And I'm having a discipline process, okay? So Trading in the Zone, and that is by Mark Douglas, all right? So write it down, take a picture of this, all right? The next tip I'm gonna give you guys, the next tip I'm going to give you, all right, is support and resistance. So most traders, when they get into trading, the first question that they ask me is, David, right, when do I enter and when do I exit? All right, so when do I get out of trades and when do I get into trades? All right, so this is important. Hey, Ranjit, welcome. All right. So if you guys know about support and resistance, right? If you've been around trading before, all right, or long enough, you've heard of support and resistance. Okay, but we're going to talk about how we use support and resistance a bit differently. All right. Let's see here. So if you haven't been here before, if you don't have this, please make a copy of this. All right. So take a picture of it, a screenshot. All right. Or use your phone. And I always tell traders, and this is important. So I always tell traders, so take a picture of it, print it out. When you get a chance, right? Print it out and have it laminated and keep it for reference. Okay. So support and resistance, the keys to your success. All right. Support and resistance, the keys to your success. All right. So we're going to talk about this. Before we do that, I want to show you guys when I got into trading, right? Long time ago, this is what we had. right? This is what we had here. You guys should see a chart here. If not, let me know. You guys should see a chart here, symbols on the left here, and then just a chart here. All right. Now, I'm just going to go through a few of these. And I'm going to just ask you guys, right? If I'm looking at a chart like this, right? And this is on a daily time frame. Forget the daily, forget the time frame for now, right? If I wanted to enter, right? Where would I enter or buy on this chart here, right? The symbol is HRMY. All right. So where do you guys think I would enter? These are the prices here on the right. And this is what you have to do, right? Right. If we want to trade, we have to decide, okay, when are we going to get in and when are we going to get out? Okay. So if we're looking at this price action here, anyone, all right, and just take a random, guess. All right. Where would you enter? So currently, or would you enter? Would you wait? Would you enter? All right. What would you do? The price is right here at 51.69. What would you do with this stock right here? Anyone? Anyone? What would you guys do right here with this stock?
Should have entered on 34 sometime in May at the bottom.
In May, right here, you would enter here. Okay, well, let's talk about, so John, good, but let's talk about, I'm saying right now. What would you do right now? Right now, current. Here's the current price right here. All right. I just want you guys to think, and then what I'm going to go through next will make sense. All right. So here's the current price right here. All right. So someone mentioned to you HRMY, and they said it's a buy, or you heard it on CNBC. Hey, right? It's a buy. You're going to have to decide whether you want to buy it or not. So what do we do? What would you guys do here with this one here?
Yeah, it looks like you want to buy at 51.69, because if you go back to August, the history said that it looks like it might go up in value based on the past charts.
Okay, so you said May right here, it went up.
No. What I'm saying is that 51.61, based on July and August, it seems that it might go up, to probably 56, because it was on 42, and previous to 42 in May it was on 34. So it looks like it's gonna keep going up.
So you think it's gonna keep going higher to about 56?
Yeah.
Okay.
Yeah.
Okay. Anyone else? You guys disagree or agree with John? Mary, what do you think? You disagree or agree with John?
I agree with him, because basically you look at what the trend has been and you want to use that as an indicator.
Okay. Okay, so John, you would enter here. So John would enter there, and then Mary would enter there. Anyone else? Hey, Ranjit, what do you think, Ranjit? What would you do? Would you enter there? Would you hold and do nothing?
I think I see a big resistance as 51. So I would see whether if that breaks up, then I will enter. Otherwise, it will go down.
So if it breaks this area here, you would enter?
Correct.
Otherwise, it might go down. Okay. Anyone else? Thanks, Ranjit. Anyone else? Okay. How do we know? How do we know if we should buy or not? Let me ask you guys this. How would we know? I'm gonna move here. Let's do this. How do we know if we should buy or not? I'm gonna go here. How do we know if we should buy? That's usually the number one question that I get. Or if throughout all these years, David, when, and the next question usually is farther down, when do I get out? Because most traders just think it's gonna go up, right? We think it's gonna go up forever, right? And we don't have an exit plan, right? So most traders wanna know, hey, David, how do I get out of the trade? Okay, so I want you guys to just picture this chart right here. All right. Hey, Chris, welcome. All right. Picture this chart right here. And this is just random. It's a random chart. And think of this as there is no structure, right? There's no structure. So what we have to do.
This thing. Why does nothing
right.
work anymore?
What we have to do is find structure in the price. So we can do it very easily. All right, we can do it very easily. And we do it by this here. We want to find the highs and we want to find the lows. All right. So price is not random. All right. If you guys notice here, hey, Deborah, welcome. All right, price is not random. If you guys notice here. All right, here is where price touched. Here is where it touched. Here it's this whole area is where it touched. All right, here. We won't count this. All right, and then here, down here. All right, so this area here, right, this whole area here is support and resistance. So here is your resistance and here is your support. All right, so we've taken what looks like a random chart. All right, and now we've formed a structure. All right, and this will make sense. All right, I'm going to find another one here. Here is another one here, right? Looks very confusing, but once we find structure, right, then we can trade. All right, then we can trade and we can find out where our buy points are and our sell points are. All right. Here we've got a few areas. Okay, so we've got support down in here, support, and then we have resistance in here, and then in here we have support and resistance in here. All right, let's keep going. I want to do one more. Here, same thing here. All right, so here we've got support. We've got really good support right here. All right. And then we've got resistance right here. So as traders, as new traders, your goal is to find, right? Take your irregular chart like this, and I train traders to do this. We train traders to find support and resistance, all right? Find these levels, okay? All right, so here we have pretty good defined support and resistance. Okay. All right. Now, if we wanted to enter, right? And I know you guys are new, those of you here for the first time, if we wanted to, if we've now defined our structure right here. All right. If we wanted to trade now, where would we enter? So John, I'll go back to you, right? If we wanted to enter here now, right, where would we enter?
Of course, I mean, you can enter in 28 and when you go to 31.67, give it and take.
Okay. So you would enter here and then take it to here.
Yeah, of course. I mean, if you're buying I mean, it all depends. If you're gonna do an option, you just I mean, one
Okay.
thing is buying at the bottom and then selling when it's high. So that's what I do. That's what I
Okay.
should do.
That's what you, okay. Okay.
Yeah, but the thing is, on this market is really volatile. So you don't know if for any reason, not for the share or for the stock, but for other news, is gonna go down. So now it depends on different things, different factors, not only the stock by itself.
Okay. Okay. Very good. Very good. We'll go through this. Okay. So you're saying buy here, and then sell here. Anyone else agrees or disagree? Anyone else agrees or disagree? So Johnny's saying we would buy here at 28, right here, at that support, and then sell here at 31, and then he would be out, take the profits here. Anyone else agrees or disagree?
Yeah, that's one strategy. Another one, like since it's right now at 31, so if that breaks 31, it will definitely go to 36. I would rather buy that as well. The low, previous resistance will become, sorry, previous support will become its new resistance. Yeah.
Okay, so Ranjit would buy here, and then you would have a target here of 36, Ranjit.
Yeah.
Okay.
And
All right, so,
we keep watching that, and if that might break, then it might go all the way to next to 42, you know, just like that, keep going
okay.
up, or it might return back. If it return back, then we sell it out.
Okay, okay. So two schools of thought here, right? Buy here, get out here, buy here, and then have a target here of 36, and then perhaps it might go higher. Okay. All right, good. Okay, so I just wanted to go through this. This is what we have to work with, right? A lot of times when we just, start trading, right? All right. Oh, this is a raw chart, raw chart. All right, so let's go back to here, to support and resistance. Okay. So here we are, support and resistance. Okay. So let's go through how it works. All right. And we'll talk about both ways of trading. Okay. Just understand, and you guys should see my chart. If not, let me know. Just understand that we have to draw in our support and resistance lines. Okay. That's your foundation. All right. So support and resistance, the keys to your success. All right. So understand when we have, and that's why I wanted to start with that, right? When you have just a raw chart like this, candles like this, right? You have to draw in your support and resistance. And the reason we want to do that is we want to know where buyers are and sellers are. Okay, so follow me. We need to know where buyers are and where the sellers are. And we also need to know where the buyers are now taking control, and then where the sellers are now taking control of price. And we need to know that because we need to follow the buyers and the sellers. So as traders, we are retail traders, right? We are not professional traders, right? We are not hedge funds, right? We're not market makers, right? We don't control pensions, right? We don't have the type of capital that you would need to move the markets. So we need to follow the big money, right? And when they move the markets, right, we want to be there, right? Either getting out when they get out, or buy when they buy. So let's go through how they buy, how they enter the market. All right. Understand support and resistance. Again, the keys to your success, critical. All right. Critical. Resistance is made, resistance here, this resistance line and this support line is made when buyers are not in control or sellers are not in control. So guess what? No one is in control. During this period here, the price between resistance here and support, right? The reason why we have support and resistance when that is made, all right? And it's made because there's a high. The price reached a high, let's say it's $100 here, and failed to move higher here. So it came to that $100 mark and it failed. Sellers came in. So we have buyers here and sellers are here. Buyers are here and sellers are here. And there's a battle between buyers and sellers. The buyers are pushing the price higher. Sellers are now pushing the price lower back here. All right. We need 2 points, 2 highs, minimum of 2 highs to have resistance. Just one price point to $100 doesn't give us resistance. We need a minimum of twice. Right? The more times it gets to that level, just like you guys saw on the chart we just drew, right? Right? We had those levels at the top and at the bottom. All right. So minimum of 2 times, right? The more times it gets to that $100 mark and stop, the stronger the resistance, right? Think of resistance as your ceiling, right? Price doesn't go any higher. Same thing for support, all right? So the buyers are holding the floor. Think of support as your floor. The buyers are holding the floor, preventing the price to go lower, all right? This area in here, John, is not tradable. Now, can you trade it? Absolutely, right? You could buy here and sell here, but that's not how we make money. Trading. And most new traders, this is what they do here. They try to trade this. And this is not tradable. And the reason it's not tradable is because no one's in control. Right? This is where you will get a lot of your losses. Think of this as confusion right here, right? Just a lot of confusion. No decision in price. All right? So can you trade this? Absolutely. All right, but guess what? If the buyers are here, if you buy here, if we look to buy here, right? And then we look to sell here, what could happen? What could happen? If we bought here and look to sell here, what could happen? What could happen? Anyone?
This profit.
Yeah, but who's sitting here? Buyers and sellers are sitting here, right? But who has more control of price in this area here?
The buyer.
Who?
The buyer.
Not the buyers.
No, the
Who
buyer.
has more control of? Who has more control of price down in here? The sellers. Okay, so think of support. Think of, and I know what we're thinking, right? But think of support down in this area here as sellers territory. And I know that buyers are sitting here and sellers are sitting here, but this is sellers territory. Support, just think of support, right? There's a lot, if we got traders that are near that support, near the floor, right? There's pressure there, right? There's once the price gets near support, that's a lot of pressure on support to push the price perhaps lower. All right. If we have buyers sitting here at resistance, there's a lot of pressure to push the price where?
Up.
Up, higher. Okay. So just know that there's a battle between buyers and sellers. Support is your floor, right? Resistance is your ceiling. All right. So we need to manage support and resistance. We need to watch where support and resistance are. And what we're waiting for, like Janet said, is a breakout, right? We need a breakout. We need to wait. So all this whole area here, we are waiting. And what are we waiting for? We're waiting to see who has control of price. Remember, in this area here, no one is in control. This is not tradable. No one is in control. We need to wait to see if the buyers are in control or if the sellers are in control. Okay, so write this down, everyone. Write this down. All right. When we enter trades, we are going to always buy on a break of resistance, and we are going to sell on a break of support. So John, it's the reverse. Okay, so we're going to buy rather than buying here on a break on support and sell at resistance. We're going to buy on a break of resistance, and we're going to sell on the break of support. We're going to buy on the break of resistance because the buyers are in control. Just think of resistance. Green, buyers are in control. Red, support, sellers. All right.
Can I ask you something? Can you make an example with just the price, just to understand? Because you know that part, it's I understand the meaning, but probably I got confused when he breaks the resistance point.
Okay, I'll go through some examples here.
Yeah, if you just want, I mean, if you.
Yeah. Okay, good question. Okay, so what we're gonna do is this. Everyone, take a picture of this because we're gonna move from here. Okay, so take a picture of this. Again, when you get a chance, print it, laminate it. It's very, very important. All your trading will come from support and resistance. Okay. All right. Everything you do will start with support and resistance. The best traders we have master support and resistance. Okay,
and actually, I throw that question because today I was looking at, was today or yesterday? I believe it was today. I was looking at the Tesla, and it went down to 199 in the morning. Crossed the 204 for the past, you know, it's been on 204 for a couple, probably month and a half, and it broke the support. It went down to 199, and it came back to 220. So it doesn't make sense. You see, I mean, it should keep going down on the break to probably 190 or 185, and instead went up, so it bounces.
It bounced. Okay. So we'll take a look at that. All right. If I forget, remind me. We'll take a look at Tesla. All right. All right. Good. And that's a good example. So so you guys should see my screen here. Okay. The 4 market phases that every trader must know. Okay. So take a picture of this, John and everyone else. If you guys don't have it, take a picture of this or screenshot the 4 market trader phases that every trader must know. All right. When you get a chance, laminate it. Keep it with you. It's important. This is your roadmap, John. This is your roadmap. Okay. So we're going to take support and resistance, and now we're moving forward, right? We're going to take support and resistance, and now we're moving forward. The 4 market phases, right, that every trader must know. And I wish I had this when I started years ago, okay? But this will make sense. All right, the 4 market phases that every trader must know. The first phase is the accumulation phase. That's phase 1. Phase 2 is the markup phase. Now, you guys are getting this information. You don't know how lucky you are to get this information. This is your roadmap. Phase 3 is the distribution phase, and I'll go through each one. Phase 4 is the markdown phase. All right, and then we start all over again with phase 1 at the accumulation phase. But phase 1, phase 2, phase 3, and phase 4. There's only 4. So there isn't a 5th, 6th, 7th. There's only 4. There's only 4. All right. So this is how it works. So the 4 market phases that every trader must know. All right. So the first phase is the accumulation phase. So what happens is this price, and think of the accumulation phase is we're looking for a deal. We're looking for a better price. All right. So what happens is this, right? And this is how the institutions trade, right? And we want to follow what they do. They always look for a discount, a better price. So they'll wait till the price falls from, let's say, $100, all right, to, let's say, $50 down here, $50 here. All right. The accumulation phase, that's where it's going to be either at the bottom left, the middle, or the right. All right. Does this look familiar here? This is your support. So this is your floor. And then this is your resistance line. All right. Remember, this is not tradable, right? Because it's the accumulation phase. All right. Think of the accumulation phase where the big hedge funds, big institutions, they're building, accumulating, right? So they're building, they're accumulating shares. And we call that blocks of shares, right? So they're building slowly, right? So rather than 500,000 shares, they buy that at once, right? They don't do that because that will scare the market, move the market, right? Lots of buyers might come in because they know, guess what? They're going to move the price up. So they're going to accumulate, let's say, 50,000 blocks of shares, right? And they're going to do, you know, let's say 10 times that. So they're going to accumulate. They're going to buy in small amounts, the accumulation phase, to not alert the market. So they're hiding their trades. They don't want you to know they're accumulating. Okay, so they're going to move the price up and down, right? Right? And they're accumulating shares. That's the accumulation phase. Once they're ready, understand, we can't move the price. Only they can, right? So once they're ready to move that price higher, right? That price is going to break resistance right here. And we know that the buyers are now in control. Why do we know that the buyers are in control? Because guess what? They're no longer accumulating. They're done accumulating. They're ready to take the price higher. And we'll know that when the price breaks resistance. All right. So we would enter here. We would buy here on a break of resistance. Remember, we always want to buy on a break of resistance. We want to sell on a break of support.
Excuse me, when it breaks resistance, is because there are more buyers willing to pay more what the seller has?
Yes, there are more buyers. That's where buyers are coming in and they're willing to, yes, absolutely.
Okay.
Okay. Now, John, if they, and sometimes this will happen, it happens a lot, right? So if for whatever reason, right, sellers come in and the sellers are strong enough, we can get back into this zone, okay? And guess what? If the price now breaks support, all right, we would have to get out. So we would have bought here and get out here. And why would we get out here? Why would we have to get out here at support?
Because, I mean, you're taking a loss because you're going to keep going down.
Yes, but who is in control? Who's in control? We're going to follow
the bottom?
whoever's in control, right? Who's
The
in
seller.
control? The sellers. So once the sellers get in control, we have to get out. And we'll know when the sellers are in control because of what? What has happened?
You break the support.
To break
I mean,
the
the other
support.
support.
Very good. Good job. Good job. Okay, so let's move along. All right, let's move along. So we bought here, right? So we are out of the accumulation phase, and now we are in the markup phase. That's where we want to be. We want to be in that markup phase. We'll get in that markup phase when the price breaks resistance. So now we got buyers are coming in, right? That's the markup phase. All right. During the markup phase, at some point, we're going to get another accumulation phase because it's not going to go up in a straight line. Price will rest like it's doing here. Okay. If it breaks support here, okay, we would have to close the trade, but it didn't. It broke what? Resistance right here. If the price breaks resistance and move higher, that's the reaccumulation phase. Okay, so that's new buyers entering the market, right? New buyers, they're accumulating, right? New buyers are entering the market to push our price here even higher. Now, all of this is called the markup phase. This whole phase is called the markup phase. And we can have several reaccumulation phase, okay? Where, guess what? It looks like this. Boom, boom, boom. All right. But when we do that, in that markup phase, we are just buying. We keep buying, buying, buying. Okay. The only time we're going to get out is when we price break support. All right. So follow me. Follow me. So here we are, the reaccumulation phase, phase 2. The third phase is the distribution phase. The distribution phase is when the price doesn't go up any higher. Buyers are done, right? Buyers are done. They're not moving the price any higher. So now we've got resistance, right? Just like down here, we've got resistance, and then we've got new support. So now we have indecision, just like here, right?
So is that because everybody's taking profit?
That could be, yes, yes. Could be taking profits, yes, yes. Okay, you're thinking, good job, you guys are thinking. If the price breaks resistance here, so we have a consolidation again. If the price breaks resistance, that's what? That's reaccumulation. New buyers are entering, we continue to hold, move the price higher. If the price breaks support, like it did here, right? This area here now becomes the distribution phase. So we're done. No more buying. No more buying. You guys see that? All right. So here was our buy signal. Here, break of resistance. We have a reaccumulation. The price breaks support. Here is our sell signal now to get out of the trade. So we would have purchased here, bought here, entered the trade here, and exit here. So we would have bought here and sold here. That's how we trade. We buy on a break of resistance, sell on a break of support. This is not tradable. This is not tradable. Once the trade is done, once we get out, all right, once it breaks support, sellers are coming in. Sellers are now in control, right? Now that's called the markdown phase. Okay, that's called the markdown phase. The price is moving lower. We should be out. Okay, within the markdown phase, we've got redistribution. So very similar to reaccumulation, we've got redistribution, and redistribution happens when the price breaks support. So it's the reverse. Price breaks resistance, we get new buyers. Price breaks support here, we got what? New what? New what? We've got new what? Entering the market. If we got new what?
Sellers.
New sellers, very good. Very good, John. So we have new sellers, redistribution, new sellers coming in to push the price even lower. Okay, and then we start all over again with reaccumulation, just like we did here, the 4 market phases. Okay, so if we were to buy, where would we buy? I'm gonna split this here. I'm gonna split this chart. If we were gonna buy, are we gonna buy on this side here or this side here? So I've split the chart. Are we gonna buy here? Where would we buy, here or here?
On the left.
On the left, right? Very good.
Yeah.
On the left. And then we would not buy on during the markdown phase. But so many traders do this, right? So many traders do this. Okay, they buy here, all right. And many cases they're not buying in that markup phase. All right. So
the hardest part is how, yeah, the hardest part is how you spot that. I mean, that's basically the $1 million question, no?
How do we spot it?
Yeah.
Okay. All right. All right. Let's spot it then. Let's spot it. All right. So, John, we're gonna mess with you this evening. We're going to, yeah, we are going to look at Tesla. Okay, so let's do that. Let's see Tesla here. All right. Tesla. All right, so I think it's TSLA, right? TSLA.
Yep.
All right. Let's open it up. All right, so here is one of our screens. All right. And we've basically color coded the 4 market phases. All right. And we have our automated signals built in. Okay. But I want, when you guys look at this, and we have our support and resistance lines all built in. Okay. All right. Deborah, you can see the screen. Can you guys see the screen, my screen?
No.
You can't. Okay, hold on. All right. Thanks for letting me know, Deborah. Okay, how about now?
Yeah.
Okay, perfect. Okay. All right. Okay. What phase is this here? What phase is this? And look at your charts. Look at your charts. What phase is this?
That's markup.
Markup. Very good, Mary. Markup phase. What phase is this?
Accumulation phase.
Very good. Very good. See how quick you guys are getting this? What phase is this here? All right, here price doesn't go any higher. It doesn't go any higher. It didn't go any higher. Right? Think of
phase.
Which one?
Distribution phase.
Distribution. Very good. Very good. Now let me explain the candles here. Okay. So green candles, think of green candles as buyers. Green candles are buyers, red candles are sellers. So green candles, buyers are in control. Red candles, sellers are in control. White candles, neutral. We're going to find the white candles usually near the distribution phase, all right, or the accumulation phase. So, but the important thing, green candles, buyers are in control. Red candles, sellers are in control, okay? The lines here, that's our support and resistance lines, okay? And we draw them in automatically, okay? This line in the middle, this is a moving average, and all it does, it separates the buyers. So if the green candles are above the green line here, buyers are in control. If the red candles are below the red moving average here, the red line, sellers are in control. Okay, so very good. So markup phase, very good. Distribution phase, very good. right? We said accumulation phase, very good. Okay, what phase is this here? What phase is this?
Markdown phase.
Markdown phase, very good. Okay. What phase is this here?
Redistribution.
What phase is this here?
Accumulation phase back again. No.
Accumulation, very good. Okay, right up here, that's distribution. Remember, sellers came in, right? Sellers came in, red candle, that's distribution phase. If we got new buyers to come in, broke resistance, guess what? That's reaccumulation phase. Okay, markdown phase here, accumulation, look here, markup phase, guess what? Distribution phase, markdown phase. So with your Tesla trade, John.
Yeah, okay.
Okay,
So what's going to happen is going to start the accumulation phase then, back again.
Yeah, and why do you say that?
Because he just finished the markdown phase, and he broke.
Yeah, it just finished the markdown phase. All right, and what else? What else is it near? What else is happening? Yeah, it's still in the markdown phase here, right? All right, but what else? What else do we know? Looking at the chart here, what do we know here? What else? Good job.
Yeah, seller is in control still now.
Sellers are still in control, but we also have, we're reaching near support. Remember, support is our flow. We have to find support first. After support, we have to get what? Accumulation, right? Accumulation. So we've got support here. That's pretty good support right here. And then we've got further support down in here. All right, look here for a second. All right. So we wouldn't get in yet. We wouldn't get in yet. Okay, we've got support here. And as traders, this is what we have to do, guys. We can't just randomly just get in, right? We've got to know where our support and resistance are. All right, where traders held the price before, held it, and now we're sitting right here. But we have further support down in here. So it could go a bit lower because we're still in the markdown phase. So we have to wait. It could go lower here. And now we could get accumulation. Okay. Or we could get accumulation here. All right. But we would know when to buy when the price does what? When the price does what? What's that?
That's a really good question.
We
breaks the resistance.
Breaks or resistance. Break or resistance. Break the resistance. All right. Has it broken a resistance currently?
No, it's still on the support line. So over here, David, which will be the resistance line here?
Okay, very good. Good question. Good question. Okay, so if you guys look here, all right. Good question. I love it. You guys are really okay. So the previous resistance was right here. You guys see where we got a buy signal? This arrow, this blue arrow here, and I know it's hard to see, is where we got a previous buy signal right here. Okay. All right. So we could get, it could go up in here, but I would say more probably if it doesn't go down further, if it holds support right here, I would think right about probably about right near this support, this resistance right here. Okay, we might get lucky, okay, and get a buy signal in here, but I'm thinking here, so probably around Ranjet, probably around 270 over in this area in here. Now we could get tight. If we get tight accumulation like this, all right, tight accumulation, all right, low accumulation, we could get it down in this area here. But if the price accumulates high like this, gets up like here, okay, then in this area in here. Now, I know what you guys are going to say. Well, David, all right, and I get this a lot, all right. I don't get it as much because we train traders to do this, but I used to get it a lot because traders would say, well, David, why can't I buy here, get in here at $200? All right, you're going to tell me I need to wait to get to 270, right? So I can't get in at $200 is what you're telling me. I need to wait to get in at 270. But David, I've lost that $70 profit, right? I've missed out because I've waited to enter here. Okay, why can't I get in here? Right, because I'm getting at the low price. All right. No, you guys haven't asked that, but I know that's
because you say it's not tradable.
It's not tradable, yeah. All right. So understand, right? If we enter here, guess what? We're still in that markdown phase. It could go much lower because the sellers are still in control. All right, kind of like here, right? If we let's say we get in here, right? It could go much lower, right? Because the sellers are in control. So what we want is this, I call it the sweet spot. Okay, so so I think, John, I think you got this, right? We would wait for the price to break resistance to now enter. Okay.
Yeah, no, I was surprised that today it went down to 199 and it broke resistance. The resistance was at 204 for probably for a month now. And it crosses to 199, 198, and it bounced it back. So I got that question because to me, it didn't make sense that it broke resistance instead of going down more, because in the past, if you look at the past, the chart, it used to be 180, a couple of months ago, it didn't go that far. So you think it's gonna keep going down? It might go down in a couple of weeks.
Now, we could put it on a smaller time frame. I'm not going to do that. Okay.
Okay.
Yeah, I wouldn't do that. But if we look here, you can see it's setting up. And the idea is if we know what phase we're in, that's the important thing to know. If we're aware of the 4 market phases, right? If we're aware of support and resistance, we'll know that, hey, we're forming support. All right, we're forming support and we should be getting ready, right? We should be getting ready to buy, right? Right. We're not ready yet. It's not ready, but we should be getting ready to buy. Okay, so think about, so we want to do the reverse of what everyone else is doing. Okay, so let's say we were lucky enough. Let's say we were lucky enough to get in here back in July of last year. We were lucky enough to get in at 180, 190, the price that you saw, right? All right, let's say we were lucky enough to get in here. Most traders will do this. Well, most investors, right? They will do this. They would have bought here and they would have held it a whole year later. And now we're back here. Okay.
Yeah,
so they would not have gotten out. They would just held it, right? They're going to hold it long term, right? So they would have bought it at, let's say 190, 198, held it all the way up to 400. And here it is back here, right? What we do as traders is this. We want to catch these markup phases, get out during the markdown phases. So we would have bought here, right? We would have bought here at about let's say 230. That's the accumulation phase. Price breaks resistance. Buyers are in control. All right, so 230 we would have gotten in at about 330 or so, right? In here we would have got out. So we would have bought here, sold here. Because the sellers are now getting in control, coming in, right? That's the distribution phase. We would have bought here, got out here, taken that profit, waited, right? Went through that markdown phase, we would have waited. Okay, we would have bought here on a break of resistance. We bought here on a break of resistance, sold here on a break of support. We would have bought here on this candle right here on a break of resistance. Here's the resistance line right here. All right, price broke support. We always want to get out when the price breaks support because the sellers are in control and we don't know how far they're going to push the price lower. Our job is to just get out. So here was our sell signal right here, this white arrow right here on support line right here. This big red candle here, these are the sellers. So we bought here, got out here, took a small loss. Right? We would have been out of this markdown phase. So as the price is moving lower from 320 all the way down to 200, all right, we would have been out. So we would have taken our profits here, taken a small loss here, been out of the markdown phase here, out of the markdown phase here. We would have waited. Here's accumulation, right? Price breaks resistance. Here is our resistance line right here. We would have bought right here. There's our system giving us the signal to buy right here on the break of resistance. All right. We can't control the price. We can only control what we do. Here, price never continued to make new highs, broke support. We would have gotten out here. All right. Taken profit here to here. Small profit here, small loss here, bigger profit here. We would have been out. We don't have reaccumulation. Price now breaks support, right? Markdown phase, we would have been out. So we would have been out here, out here, out here. We would have bought here in the markup phase, small markup phase here. Price breaks support, resistance becomes support, gotten out here. Small markup phase here, take profits here. All right. And that's how we trade. We trade, just think your markup phase, that's where you trade. All right. Regardless of how long it is or how short it is. And we always buy on a break of resistance, sell on a break of support. We buy on a break of resistance because the buyers are in control. Now, we don't know how long they'll stay in control. All right, but all we can do is buy when they get in control. When the sellers get in control, we have to get out because we don't know how far that selling will go. Okay, so markup phase, accumulation, markup, distribution, markdown. Okay, accumulation, markup, distribution, markdown, sell, markdown phase, accumulation, markup phase, distribution, markdown phase. And so now we would wait. We would wait for the price. It's still in the markdown phase. If it breaks support, that's redistribution. More sellers would come in. So John, you would just have to wait. All right. Right. If it breaks support, redistribution, which it could happen. Let's say it breaks that $200 mark, redistribution, it goes down further. All right. And at some point, right, it does this. If it breaks support again, and they will do that sometimes, that's another redistribution. It could go to $50.
Wow.
Yeah, it could go to $50. So as long as it keeps breaking through that support and getting through that redistribution, let me see if I can find one. We wait and we wait and we wait. Okay, let me see if I can find one here. 1 second here.
Hey David, before we switch this, just like
Hmm?
on 21 July, right? You said that's a buy-in phase, that blue arrow. So
Right
if
here.
we
Okay.
got in, no, on the July 21
Okay.
previous one,
Oh,
yeah.
okay.
So if we got into that, then the where you just have the arrow cursor, that's a resistance, right? It went down, right? Like yeah, went down into that white candle.
Uh-huh.
So we should be getting out there, right? Instead of holding it up.
No. Okay. Good question. So what did it do here? And I'll open it up. So notice here. All right. So Ranjit, here is your resistance, and you said your support is where the white candles are, right? So why, your question is, why didn't it get out right here, right? At the white candles, right?
Yes.
Yeah. So why do you think? Why do you think it didn't, the system didn't close the trade to get us out here on the pullback here? Because most traders would have gotten out here. And if you have stops, if you put a stop loss, you would have gotten stopped out in this whole area here. So why do you think it kept the trade, held the trade?
Oh, okay, I see. Now I can see that it didn't broke that support.
It
So
didn't break support. It held support.
yeah, but 208 what you drew, it will be little above, right? So it will be around like 209 or something. There is a strong support. So but anyway, so if we bought at like blue arrow, which is 210 or 11, right, and it went to 200 whatever 209, just above 208, what yeah, over there 209, and if it broke over that point, then you would have been selling it, but it just hold it at
It
208,
just,
207.
yes,
but
yes.
but but we should be having some stop loss, right? And it should automatically sell it off, kick us out, right?
Yeah.
So
Yeah, good question. So we don't do stop losses because we have the system, right? We
right,
have the
okay.
system. So let's say if you guys, you don't have the system and you wanted to protect your trade, right? You wanted to put a stop loss. You can do that, right? You can do that. Just do it, right? Below your support. Because that's when the trade is over, when sellers are now in control. We know that sellers will be in control when the price breaks support. So let's say, so we've got support right here. We know this is pretty good support. Okay, so if you were going to put in a stop loss, all right, on your own, then just put it below your support line. Okay, so just don't put it between your consolidation. So let me do this. Hold on.
no, definitely I see that, but we entered little higher and it went below our entry price, right? But we still didn't get it out. That's what you're saying.
Yeah,
Still
yes,
hold it.
you still hold it. Yeah, you still hold it. So if you guys are going, if you're going to put, remember, right, the same process. So if you look at your support and resistance line right here, right? So if when the price breaks resistance, hold on. And we have traders that do this. I don't like, I rather use the system, okay? But if you don't have the system and you want that extra security, okay? If the price breaks resistance, we know we're gonna buy here. If you want to put a stop loss, you have to put it below your support. Okay? You're going to have to put it below your support, because that's where sellers, you know, that's your confirmation to get you out. What most traders will do is they might put it here. They might put their support anywhere in this area. All right. This whole area is tradable. That's not that it's our entry, but the price could do this, which we've seen this a lot, right? It'll pull back a bit, right? And so we have to give it room. And then it might do something like this, which is what Tesla did. So if you put your stop loss anywhere in this area, you could get stopped out. If you put it anywhere between support and resistance, you could get stopped out. And the brokers know this, and the brokers will run your stops. Okay, the brokers know, they can see your stops. So when you put your stops in on the platform, they will see your spot, and most traders, this is what they do, right? Most traders will put, because, you know, they don't want to lose a lot of money. And they feel, well, you know, I'm going to put a tight stop. I'm going to put a 1% stop loss or 2%, whatever, right? And it's usually not enough unless you trade on a very, very small time frame. All right. So what the brokers will do, and they can see your stops. They will see your stops on the platform because it's their platform. And you put your stop, when you put in your stop loss, you're putting it on their platform, and they can see the whole clusters. Okay. They'll see the whole cluster of stop losses. So all they have to do is run your stop, push the price down, get everyone out, right? So you get stopped out, and then now move the price back up. All right. Or you could have a big hedge fund, right? They want to get liquidity. They want to get a cheaper price. So they'll move that price down lower. All right. Get a lower price and then move it back up. Okay. So we don't want to play in that game. Anywhere in here, what I said before, this area is not tradable. So if you're going to put a stop, you got to put it below support. Okay. When you put it below support, that's when we know, okay, real sellers are now in control. Real sellers are not in control here. And we only exit when real sellers come in and say, okay, now it's done, it's over, we're out, and now we're getting out and we're taking the price lower. We're done with the trade, just like Tesla here. Okay.
Perfect. No, this is really good. I really appreciate. But like what you're saying, once it breaks the resistance, right? And your X mark was there and you got in, and it like the broker or whatever hedge fund, they will break your stop loss. So we have to take up that loss. So, and it goes to the support, right? And if it goes below, then we get out with loss.
Yes.
Right, David?
Yes. Yes.
Or because once it breaks the support, that's a total failure. So we
Yes.
still have a hope. If it trades from resistance all the way to support, we still have hope. So we still continue to hold.
Yes.
Correct?
Just like
That's
the
what you're
system
saying?
did. Yes. Yes. Just like the system here, right? So we never broke support down here. Okay. Never broke support. It stayed within support and resistance. And then guess what? It continued to move higher. Okay. Here, even here, right? We have a candle that came all the way down here. All right. All the way down here, didn't break support, right? It went up, pulled back, and then continue to move higher, right? We always sell when the price breaks support. So if you're going to put a stop loss, you want to do it below support. You want to do it below support. Okay, so here is a support line. Here is resistance. Resistance becomes support. So here is resistance here. Broke resistance. We got a buy signal, failed. And guess what? Resistance becomes support. We got a sell signal to get out here. We didn't get a loss here. Okay. So good question. Okay, so put it, if you're going to put a stop loss, I'm not a favor of stop losses because they will see your stop losses. But if you put your stop loss below your support area, that's a safer place to put it. Okay. Now, yes, will you get, if it comes all the way down below support, is it a larger loss? Yes, it's a larger loss. Okay. But if you put your stop loss in this area in here within support and resistance, that's not trading, that's gambling. You're gambling. That's gambling because you're just asking for the brokers to run your stops, get you out, and then move the price in the direction. And that's frustrating. Okay. That's frustrating. And we see that all the time. Now, we're going over a bit, but I want to cover this. Because I know most new traders have a problem with this. All right, so I want to cover this. And this is the last chart, and then I'll let you guys go for the evening.
Yep, I really appreciate. Thank you so much for covering that. That's like over once it breaks the resistance, so we don't know any clue, right? So, but like we have to be 100% positive that it should go up, until unless it breaks the support, we just keep a hope high. Okay, it will go up.
Yeah.
I think that's the key, what you're saying. Okay,
that's the key.
Got it.
And the thing is this, right? You're right. We don't know, right? We don't know. And the way you trade as traders is, it's a game of probability. It's a game of math. Okay. And our goal, our only goal when we trade is to cut our losses quickly. Let me repeat. Our goal when we trade is to cut our losses quickly. So when we're wrong, and we'll know when we're wrong when the price breaks support. It's not personal. It's nothing that we've done. Right? It's just the price, what the price does. If buyers are done, if buyers are saying, hey, we're done, right? We're out, guess what? There's nothing we can do. We can't force the trade. Hey, Gary, welcome.
Hey.
Okay? We can't force the trade. Okay, so the goal in trading is this. This is the simplest way to look at it. It's not personal. All right, we can't get emotional about it. Our goal, our only goal when we trade is to buy on a break of resistance because the buyers are in control, sell on a break of support because the sellers are in control. We want to be in position when the buyers are in control. That's the markup phase. Sellers are out. Markdown phase, we want to be out. Our goal is we want to get big wins, small losses. Big wins, small losses. We need the big wins to pay for our small losses. We will have losses in trading. Can't get away from it. It is what it is. You guys want to trade, you're going to have losses. Okay? The way we get big wins is through that markup phase. All right? The way we get small losses is by getting out on a break of support. All right? Look here. Look here. So here is Tesla. We bought here. We sold here. Right? Did we have a big win or a small win?
Big win.
Big win. Right? It's a game of math. It's very simple. Bought here, sold here.
But
right?
my question is, I'm sorry to interrupt you, is as a trader, the idea is to stay on the market for a day, for a week, for 2 weeks.
It
In this
depends.
case, it lasts.
Yeah, it depends on the time frame, John. It depends on the time frame. Okay.
Okay.
We can go through that on another class. Okay, that's a whole
Okay.
nother subject. Okay, that's a whole
Okay,
nother
okay.
subject. Okay, I just want you guys to see here how, as traders, you make money. All right, as traders, you make money. Because I know as new traders, especially, there are so many concepts out there on how you make money. All right, this is how we make money. All right. All right. All right. We want to stay in our winning trades as long as possible. So we bought here, sold here, right? That's to the markup phase. We tested again. We're constantly testing the markets, testing for a break of resistance, testing for a break of support. We bought here, sold here. Did we have a big win, a loss, small loss, or big loss?
Small loss.
Small loss. So let's say let's say this was 40%. All right, let's say this was a 40%. We had a small loss here. So let's say this was 3% loss here. So negative 3%, positive 40%. And then we stayed out of that markdown phase. If we are in that markdown phase, while the price, guess what? We're going to have a larger loss, or we might have a profitable trade that now is not as profitable. Okay, stayed out of the markdown phase. Here we had another trade here, broke resistance. All right, got out here, broke support. Right, we had a profitable trade here. Is this a large profitable trade or a small profitable trade? Small profitable trade. So let's say profitable trade of, let's say, 8% here. Okay, so 40% profitable trade here, losing 3% loss here, 8% gain here. Are we making money or are we losing money?
We're making money.
We're making money. And the only reason we are able to make money is because we stay in our winning trades as long as possible, and then we cut our losing trades quickly. All right. If we stay in our losing trades, right? If we stay, this is what most traders will do. If we stay in our losing trades, and as soon as we see profits in our profitable trades, we get out. All right. Then it's the reverse, right? This becomes a losing trade. This becomes a profitable trade. This becomes a losing trade. All right, so we lost 40%, gained 3%, lost 8%. Doesn't work. The math doesn't work. The math doesn't work. So what we have to do is we have to stay in that winning trade. And I know it's hard, right? Stay in that winning trade as long as possible, because we need those winning trades to pay for our losses, because we will get those losses. But our goal is we want to cut those losses quickly. Okay. We're going to end with this. I do want to show you guys this, and we'll end with this. All right. All right, we'll end with this, because I have to help Gary with an update. Right, Gary? All right, let's see here. All right.
Yes, sir.
All right, so let's see here. If you guys, some of you guys might have seen this before. Okay, so John, right?
Yep.
We talked about this earlier. Right, here is your support and resistance, right? And you'd mentioned entering here. But now that you know this, you're not going to do this, right? You're not going to
No.
enter at support and try to get out at resistance. We're not going to do that. Now that you know how this works, okay? So we know we're not going to do that, okay? All right, so this is how we do it. Trend following, so we need the trends. We need the trends that will happen in the markup phase. We need that to be successful. We need those trends. Okay. So we are never going to buy at the bottom near support. Okay. So let's say the price comes down like this. All right. Here is support. We're not going to buy down in this area. Guess what? Because it could break support and we could get redistribution. Imagine this, right? We enter in this area in here. All right. New sellers come in to push that price lower. All right. In that redistribution phase. And guess what? All of a sudden we bought here and we're wondering what the heck is going on. Right. And we got a lot of new sellers, and this will happen. We'll get a lot of new sellers come in to push the price lower. We'll get big candles coming in. All right. So we don't want that. We want to wait, right? Have it go through that accumulation phase. We're going to enter on a break of resistance here. Okay. So we're going to enter on a break of resistance here. All right. We'll never get the very top. Okay, if we try to get the top, we're going to get out here. This might look like the top. This might look like the top. This might look like the top. All right, so we need to wait for the price to stop. It needs to make a high, and then it needs to come down, right? That's that distribution phase. And then we need to wait for the price to break support, right? Break support to exit. So we're going to enter right here on a break of resistance. We are going to exit right here on a break of support. So we're going to buy here, sell here, sell here. Buy here, sell here. Never gonna get the very top. And I know you guys want this. I know you want the very top. You want the very best price, the very high price, and the very low price. You're not gonna get it. You'll never get it. All right. We want the middle part. And I call this the meat of the trade. We want the meat of the trade. I call this the sweet part, right? The sweet part of the trade. Here and here. Buy at the break of resistance, sell on the break of support. All right. If it breaks support, we're going to get out. Break support here, going to get out. Breaks resistance here, we're going to get in. All right. All right. Any questions on this or anything else? Make sense? Doesn't make sense?
It does.
Does make sense. Very good. Very good. So practice this, right? When we do our one-on-one coaching, I tell traders to, find a trading chart. Doesn't matter. Start drawing out your support and resistance lines. Start finding the four market phases. Find the markup phase, right? And you'll find it every chart. John, you can find it on every single time frame. Okay. So whether it's a 1 minute time frame, a 5 minute time frame, an hourly time frame, a daily time frame, weekly, monthly, you will find support and resistance and the four market phases on every time frame. And your goal, you guys' goal is to find those phases and then wait. I know it's hard to wait for traders, right? We just want to jump in, but we want to wait, all right? Patiently for the buyers to come in, or wait patiently for the sellers to come in and get out, right? We can't be in a hurry to get out, and we can't be in a hurry to get in. All right. So that's all I've got. Thanks, everyone. Thanks for coming, guys. Hope this was helpful. Now with
yeah,
beginners, go ahead, John.
definitely. If we're gonna get in contact with you to get more info and see how you guys work for coaching and things like that, it's just to Monster Trading System to contact you.
Yeah. So monstertradingsystems.com. Okay. And we do the training. I would recommend coming to the training. Some of the other classes are more advanced, but you can, it's how you learn. So
Okay.
Sundays through Thursdays, we do a class every evening, a different class. Same time, 7 p.m. to 7:45 p.m. every evening. Okay.
Okay.
The website, you can go on the website. Everything we do is on the website. You can also contact me directly. All right. 407-733-0185. I get busy, so a text. Text is good. I don't really check phone messages.
Do you guys have classes during the week that is real time investment, like from 9 to 4?
No, not through trading hours. No, it's after
Okay.
after hours. We don't do that anymore. But yeah, after hours we do the training classes after hours, not during market hours. We leave those market hours for traders. Traders are usually busy trading, during those market hours. All right.
Okay.
And then email, you guys can reach me at email, david@monstertradingsystems.com. Okay.
Okay, David.
But we do the classes every evening. And then coaching for new traders, the one-on-one coaching, we have 3 different types of coaching. Okay. The 4-week coaching is good. We do a refresher, 2-week refresher. That's usually for traders that have been with us for a while. And then we have 6 months. Don't do the 6 months. 6 months is for traders who've been with us for a while, and they just want to take their trading to a whole nother level. Okay. And then we have testimonials, success stories. It's good to go to the testimonials to find out what other traders are saying. Okay. About the coaching. Okay. So
David, I'm sorry, the question is probably too personal, but you guys trade every single day?
Our traders trade every single day. I trade every single day. I trade every single day. Yeah, but we trade different markets, so we don't trade every market every single day. It depends on what the market is doing. Okay.
Okay, perfect.
So it depends on what the market is doing. We're taking a little break right now with forex, but stocks are moving. Right, we just got recent buy signals in the stock market, so it really depends on the market, what the market is doing. Okay,
I got you.
Yeah. But yeah, we would like to trade every day. We would like to, but that's not usually the case. But we usually there's an opportunity somewhere to trade. Okay, so whether it's futures, whether it's crypto has been flat for a long time, or months now. Whether it's equities, stocks, forex. All right, we usually move, and that's why we call it trend following. So we want to follow the trend. So wherever that trend is, we want to follow it, and we want to find opportunities in that market.
Is the strategy the same in each type of market? Let's say in futures and equities and forex and crypto?
Yes, very good question. Yes. So that's what's cool about this, right? About the 4 market phases, support and resistance. So we can use that because it's just price. It's just price action, right? The same price action like this, right, is the same price action we will get in any market, right? So we can analyze any market. Some markets will have more volatility than others. Some markets will move differently, right? They have their same different behavior, but the structure is the same. The 4 market phases, support and resistance. So we can take that, right? We can take that process and we can apply to any market. Okay, good question. Good question. So you learn this, you learn it well. You can take it to trading options, right? You can take it to trading futures, any single market. right? The how you execute the trade might be different, right? With options, you have a time element, right? With futures, you might be doing more commodities, right? And it's more volatile, all right? But the once you learn this, you can take it to any market. All right. Good question.
Last question. Sorry. So the financials or a company is irrelevant when you are going to look at the charts. You just follow the same principle.
Yeah.
And it is okay. Okay.
Yeah. So it's irrelevant, right? The fundamental. Now, listen. There are fundamentals traders out there, and I'm not going to knock them, right? But for what we do, right, we follow price, and we assume that if the price is going down, because guess what? We don't have time to do a lot of research, right? We assume that the price is in the fundamentals, or the fundamentals is in the price. Okay, so just assume that if the price is in the markdown phase, so like here, right? Just assume, that's all we need to know. Just assume, you guys should see my chart here. If not, let me know. Just assume if it's in the markdown phase, it's bad fundamentals, bad news. If it's in the markdown phase, it's bad news. Bad fundamentals, bad news, right? Sellers are coming in, breaking support, the news is bad. Just assume, right?
Yeah,
if it's in
that makes sense. And
Yeah.
it's actually the truth, because I've been following Tesla, and what you're saying, it's if you compare the uptrend and the downtrend, the news, and compare what, where they're being, and the sales and the earnings and all this stuff, it makes sense going up. The thing, you have to take a lot of time reading financials and news and all this stuff, and you don't have time to doing all the stocks you're gonna try to sell, buy and sell.
Yeah. So it's built into the price. So just assume markup phase, boy, the news is good. News is good. We should be buying. Markup phase, green candles, news is good, right? Data is good, fundamentals is good, right? Break support, sellers are coming in, the news is bad. Okay. Makes it so much easier.
Absolutely.
Yeah. And just how many times have we had good news, right? Tesla is a great company, right? We see the Tesla cars out there. They're selling cars. It's a great company, right? It's a great company, very innovative company. So why is the stock, why did it go from 400 to now 200?
Good question.
And now if it goes down to $50, does that mean Tesla is not a good company anymore? We're not going to drive Tesla? All
No,
right.
we just keep with the same principle.
Yeah. So doesn't matter, right? Doesn't matter. We follow the price action. We follow what the price is doing, and we'll know what it's doing through the four market phases. Okay. And following support and resistance. We want to know, hey, when are the buyers coming in and when are they getting out? And our job is to just buy when the buyers are buying, sell when they're selling. All right. Very good. All right, guys. Thanks. Good job. Good questions.
David, thank you.
Yeah. Welcome, John. Good job.
Keep in touch.
Yeah. All right, guys. I will see you guys tomorrow for our trend. What is it? Tomorrow is trading in the zone, trend following, and trading systems. And then on Thursday, we'll do equities, stocks, options, and ETFs. And then Sunday, we start all over again with forex, cryptos, and futures. Okay. See you guys tomorrow. Take care, guys. Bye-bye.